Equity markets have had a stellar run, spending much of 2024 in record territory. But what can we expect for 2025, especially amid ongoing geopolitical conflicts, potential trade tariffs, and economic uncertainty? Here to discuss the big themes of this year and next is Syed Naqvi, Managing Principal of TD Wealth Family Office, and Brad Simpson, Chief Wealth Strategist at TD Wealth Investment Office. Great to have you guys here for this discussion. Syed, I'm going to start with you about some of the investing trends you saw for the ultra high net worth client this year.
Thanks, Rick, for having me. So for 2024, we would break down the trends in three different categories. From an investment management perspective, maintaining purchasing power remained the paramount concern for family offices and ultra high net worth clients. We saw some really good data for inflation, where we saw inflation numbers come down, but in real terms, asset prices remained quite elevated. And that meant that you were solving for higher hurdle rates when it came to your portfolios. So in that kind of an environment, we saw risk assets do really, really well. Equities had a record year. And anything tied to real assets, such as commodities, infrastructure, private equity, they did really, really well. Secondly, from a thematic perspective, AI and technology-related themes continue to thrive. We saw spectacular performance from the Mag 7 stocks, NASDAQ, and S&P 500 as a whole, but we thought that there was a lot of breadth to this theme across different asset classes. So even if we look at private real estate, we noticed that data centers continue to be quite in flavor. If we look at infrastructure, energy consumption and energy creation around AI was quite in scope. And when we look at private equity, we really saw private equity companies looking at themes that look at monetizing AI as a theme. So investing in sectors such as healthcare, which have already been able to utilize AI to create tangible value. Lastly, I would say we saw a lot of financial planning work happen where fundamental inputs that go into financial planning have changed. So we touched a little bit of inflation, but people are living longer, and that means that you have to consistently evaluate your spending habits versus your overall wealth. Secondly, we saw an evolving tax landscape in Canada. We were supposed to have a change in the capital gains tax. I know it still isn't a law, and we expect it to come through, but what that meant as a portfolio manager is that you really had to evaluate securities you had in a portfolio from a perspective of, do this still make sense? So to give you a quick example, short-term corporate bonds, if this does go into effect, will not be as attractive as they were before because capital gain portion will now become smaller. And lastly, with the record run in the equity market, we saw a lot of donations and giving away of wealth from clients from a philanthropic perspective. Our private giving foundation saw record donations, a lot of them in kind of a lot of securities that have gone up in price. So not only is this really good practice from a tax planning perspective, but really ties back into the values and goals of your wealth and your portfolio.
All right, some fascinating trends there, of course. As Syed was saying, what a year it has been in the equity markets. Brad, how would you describe this from an investor's point of view?
Well, I guess I think twofold. One, I think if we look back from a year ago, I think folks would be pretty surprised at what a great year it's been. We said this was going to be the year of elections, and indeed we has. We think this is going to be the year of uncertainty. It certainly was. We got through we got into the summer, and we had a little bit of market volatility, and I think there was quite a bit of fear leading into the fall and the U.S. election and what could happen there. And lo and behold, here we are sitting at the end of the year. Let's call the TSX up 22-23%. Let's call the NASDAQ a square 30, and call the S&P 500 27-28, somewhere thereabouts. And I would think that if you're sitting back for a minute, I think then you look at your fixed income markets. Maybe your capital gains weren't what you thought they were, but got a little bit of a capital gain, especially in Canadian markets, and with you look across the capital stack, 10-year Canadian bond 4.1%, somewhere in there, and across your yields are roughly just off a kind of 15-year highs. As Syed has pointed out, it's been an improved year for private equity, particularly in secondaries after it's been a difficult couple of years for general partners there. So I think we would kind of summarize at the end of this year, as an investor, you can't kind of get a year better than this one. And I think so hopefully it's one of kind of, I feel pretty good about it.
All right, so that's the year that we are almost through, the year we are headed into. Syed, what are you seeing as themes, trends in the family office space?
Absolutely. So, I mean, right off the bat, I think the fiscal and regulatory landscape that will, take shape once Donald Trump takes inauguration is going to be really, really important. And let's not also forget that we have an election year coming up in Canada. So if we look globally, tariffs, geopolitical tension, policy, there are a lot of unknowns, and we believe that there will be more volatility. So from that perspective, we think that countries will have potentially siloed outcomes based on a lot of these variables, and how do they play out for them, including Canada, right? We're hearing a lot about potentially tariffs coming here as well. So from a thematic perspective, heading into 2025, when we're talking to our families, what we're seeing is a preference for risk to continue. So clients are preferring risky assets. Inflation remains elevated. We think that there's a lot of fiscal stimulus that's still flushing through the economy. Trump should be quite inflationary as well. So when we look at equities, when we look at real assets, private assets, that's where we're seeing, from a thematic perspective, clients continuing to put their money to work. The second thing that I would look at is, it might sound a little bit cliche, but diversification is really in the news right now, and really in sort of the portfolio evaluations that we're doing with our families. U.S. market has a record divergence against the rest of the world when it comes to valuation. We see the concentration in the top U.S. equities as well. So really looking at the risk exposures and portfolios for 2025 is the name of the game. Lastly, two other points that I will mention is that we're seeing a propensity towards incorporating crypto and Bitcoin into portfolios in the family office space. And this is something that the family office and the ultra high net worth space has been sort of slow to institutionalize within their portfolios. But we do think that this is now here to stay. And whether that's sizing of that position, valuation of that position, those are all things that we are discussing with our families right now.
All right, some fascinating trends there from Syed. Brad, I know you think deeply about these things. It is your mandate. When you look into 2025, themes, trends you're watching.
I think the first one is that we expect there'll be a correction in 2025, and before people get ahead of that, I mean, as we've just spoken, we've had a tremendous run for equity markets, and volatility has been incredibly low. And a natural occurrence in a market are the ebbs and flows. And so I think by the time we get to the end of 2025, I think we'll actually still be in a very positive place, and that's tied to our belief in the strength of the U.S. economy. But I think it's wise to prepare for this, because in many ways this seems to be a market that is losing a little bit of steam, and I think it would be a very healthy occurrence. I think the second part is which shows the positive side of the argument, and we think this story of U.S. exceptionalism continues. Very much the soft landing is in place in the United States, and the result of this is that this is very much a positive for equity markets in the U.S. We also think that we're coming to terms with this new administration, and despite the political fears around this administration, the impact of changes that they're talking about is a net positive for ultimately for businesses, and I think that's why we're seeing the market react the way that it is right now. If you have a healthy U.S. economy, another thing we have in the Great White North is the byproduct of that is a very healthy environment for the Canadian equity market as well. Both and we think that in financials, and also we think in the resource sector that will be a positive as well. I think the last one, what I would look at is we also think that as we move into 2025, that two themes that kind of go side to side in the alternative section. One, in private equity, that going back to 2022, which was a rough year for private equity, 2023 was a year of recovery, as was 2024. We think 2025 is going to be a continuation of the positive nature for that end of our allocation. So we look forward to that. And the last one is that we also think this is an environment really well suited to long-short strategies, both in the equity side of the market and on the fixed income. We believe that there's going to be somewhat of a pickup of volatility. We think as markets broaden out, this broadening is a very healthy thing. Broadening also means that there's different names that are winners that are improving and going up. It means on the other side of that there's more companies that are getting impacted and on their way down. In an environment like that, long-short strategies are real positive. And I think for our clients who are wanting to have risk-adjusted returns that are very favorable, we actually think it's an environment that's really well suited to making sure that we're deploying that across our portfolios, which indeed we have been.
Fascinating stuff. Very illuminating conversation. Thanks so much for joining us.
Thanks for having me.
Thanks.